My name is Jeffrey Ward. I represent Turnkey Lender. I'm one of the enterprise executives here. We greatly appreciate your time to talk to you today during these historically challenging times. As we go through our presentation today, we will talk to you about several of the factors that we face, digital lending today, COVID-19, and beyond. These are unprecedented times that we have not seen before. Today, we find ourselves in a situation where states are shutting down business operations as we know it. The general population has been asked to voluntarily self-quarantine, and these are changing, as we speak. Small to mid-sized businesses are at a standstill, and unemployment rate is increasing rapidly. And all this is done is create anxiety, confusion, and isolation as the new form for lenders, for borrowers, for the general public as we know it. Today, we'd like to talk to you about how a fintech strategy can be a game changer to your financial institution during these historically challenging times. We will talk about subjects where strategies, communication, all of those factors can play a huge role in meeting your customers' expectations during these times. So let's talk about customer experience. In today's world, from a digital lending perspective, customer experience is one where attention span is shorter than ever. We want what we want, and we want it now. And that could be in good times from loan origination, and that could be in bad times as we're facing now, wanting to communicate with our lender in order to either defer or modify our loan as it exists. We can talk about ease of use. How do we easily communicate with our customers? Making that communication easy for us, making that communication easy for our borrowers as well. We can talk about back office efficiency. In a lot of the world as it exists today, there are lenders and there are organizations, traditional and non-traditional, that in some form or fashion are in the process of bringing automation, technology, and efficiency to their back office. We will talk about that with our processes today. Automating the loan lifecycle. We could argue that in good times, lending institutions make a lot of money loaning it out and originating loans, no matter what kind, be it residential, consumer, business, C&I loans, or commercial real estate. And in bad times, the loan lifecycle process could be collection, modification, deferment. How revenue can be enhanced during an up market or a down market, and also look at how do we build and increase our financial institution brand loyalty. So how can you continue to help your clients in these historically challenging times? My family and I were given the opportunity to go on spring break about 2 weeks ago, before all of this kind of set in. And now as we come out of spring break, we find ourselves at home, all of us, my wife, my kids, and I, all sharing the same space and really not knowing what we don't know. We find ourselves in a time where the media is telling us a lot of information, and having a legitimate source to depend on in these challenging times is very relevant. Can create anxiety, can create confusion, can wipe out the toilet paper on the rolls at the grocery store, as we've seen. So during these times, the way you could potentially help one of your clients is really looking at and developing a strategy for alternative lines of communication. Those alternative lines could be how would you deploy, use, and leverage SMS text messaging with your clients. Everybody today has an Android device or an iPhone device. How are you communicating with them today? At what frequency? What are you communicating with them? Are you communicating open for business, maintain as usual? What is your communication today? We've also had experiences with some of our clients where they take that form of communication to a different level, and they do so by personalizing letters, emails, even text messages from executives within their financial institution all the way down to their borrowers, showing empathy, showing support, showing concern in these challenging times that we have never seen before. The other way you could continue to help your clients during these times could be a loan deferment process. Make it as easy as possible. So when you think about making that ease of use, how today, what is your setup? What is your strategy? What is the workflow for a borrower who has found themselves not prepared for this rapid change that has hit them square in the face? Is it documentation that is presented by the borrower to your institution, granting them a 30, 60, 90-day forbearance? Is that communicating from the borrower to your financial institution over the phone, and then having your borrower sit in a waiting line to be able to have a response to their request? So really looking at that customer experience in this side of the world, in a down market, being able to grant them access to an individual that can help them with their loan payments at any given period of time. How can technology give you a better understanding of your possible borrower? So today there are different alternative scoring strategies. Scoring strategies could include looking at how a potential borrower manages their cellular device, how they capitalize their index of contacts. Is their first name capitalized, last name capitalized, or both? How are they organized? Could give you a hint of the character that these potential borrowers could represent to your organization. Technology today gives us the ability to integrate directly to different types of financial accounting systems, being able to go in and look at a balance sheet detail, compare that against your credit policy by credit product, and look very quickly at a borrower's ability to borrow funds based on what is in their accounting solution. Today, there are technologies like Plaid that give you access to a borrower's bank account, being able to identify debit and credit trends, being able to look at liquidity in that account. Do they truly live from paycheck to paycheck, or is there additional capital that could be used either for a loan or for repayment of a loan? And then lastly, geographic segmentation of your clientele. You have strategies today that give you the ability to structure credit facilities into a geographic area within a city to increase or promote business development, or being able to look at a potential borrower, where they live, how they commute, where they go throughout their day. These are a few examples of ways that technology can give you a better understanding of your borrower. In times like these, building and maintaining your institution's loyalty and awareness is critical. Right now, an example could be that your wife, your husband, your significant other could be at home and could be spending minutes, hours on the phone with an institution and having a really good experience or a very bad experience. And then they can take that experience and very quickly socialize that experience, either by social media that we are inundated with today, or by a simple conversation that they may be having with one of their friends on the phone as they're trying to navigate the length of the day with their kids in their house, with the spouse in the house, with being in isolation. Another way you can continue to grow your loyalty and brand awareness is talking about and appreciating your customer business. How could you do this? You could do this through specials, special type of products, special type of accounts, special type of incentives based on a client's market segmentation. And that could be from a revenue segment. It could be from an industry segment. Could also be from a geographic segment. Really looking at and understanding the best ways that you could benefit your clients within those segmented areas. And then building a customer loyalty program to benefit and reward loyalty. And those could be communicating with a potential borrower that they could qualify for a new loan at this period of time based upon repayment history. That could be that they could qualify for a deferment at this point in time because of customer prepayment history. That could be a number of different strategies or products or ways for your customers to benefit from you while they've been at your financial institution. As the market turns, and we know it will, how will you manage your collections? Unfortunately, right now, the market, the service market, the consumer market is shutting down as we know it. And cash flow will be of the utmost importance in the given future, in the near-term future. So what is your strategy for loan deferment? Is that simply if you live in a certain area that has been affected by the coronavirus, that you give a borrower a 30, 60, 90-day deferment? Or is that you could modify that loan, those repayments to best benefit your clientele during these challenging times? Could that mean that while COVID-19 is going on, that we slow those payments down? Could that mean that we change those payments over time? What could that mean? So really defining and understanding either a loan deferment strategy or a modification strategy at this point in time is where you will most benefit as an organization. Does your organization believe or do you offer loan forgiveness? Something to consider. And then also loan write-offs. How do you do that? At what point in time do you do that type of write-off? So going back, asking this question, how will you retain your clients during these extreme times? Is it regular communication? As we've discussed, alternative ways of communication are very key during this time. Being able to give your borrower peace of mind that you as an organization understands the economy that they are sitting in, the market that they are living within today. What is that communication strategy? What is the regularity of that communication strategy, and how will it be deployed? SMS text, email, or the old-fashioned way on the phone? During these times, you may want to offer your client the ability to show your support and show your empathy by either personalized letter from key executives or even training or offering your customer support team just to go the extra mile to listen to your clients when they call, and the concerns and the anxiety that they may hold right this minute. So being able to understand, offer support and empathy is very important during these times. Last and not least, could be marketing incentives, could be specials, could be new products. And what type of products, what type of marketing incentives or specials could you offer that could be a benefit to your clients as we go through these historically challenging times? We greatly appreciate the opportunity to go through our facts. What we would now like to do is open up the time so that if there are any questions that you would like to open up to the floor, we would gladly address any questions that I could address for you at this given time. We greatly appreciate the opportunity to share this content with you. My name is Jeffrey Ward. I can be reached at jward@turnkeylender.com. If you would like to correspond with me directly, if I could be of service, we greatly appreciate the opportunity. We hope you found this time valuable for you during these challenging times. Thank you very much for your time today. Have a great day. Bye-bye.